Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in Ukraine. And yes, you heard that correctly. I'm not talking about Russia. I'm talking about Ukraine itself. And interestingly, this is the first time in the last 2.5 years since the invasion started that I've actually focused in on the Ukraine economy. And the reason I wanted to talk about it today is that Ukraine have now agreed a restructuring plan for all of its bond obligations. And these bond obligations are quite interesting because they've been having problems for the past 10 years or so, since Russia invaded Crimea and annexed it back in 2014. So I'll go through the details of the bonds that exist, what Ukraine owes, what's been happening since the current invasion started in 2022, because there was a moratorium put in place where all the bondholders agreed to waive all of their coupons for a 2-year period. However, that expired in August 2024, which is why they had to agree a restructuring. And also I think what's interesting is that Ukraine, in addition to all of the aid that it's been given over the past couple of years, has also agreed one of the largest facilities with the IMF. So we'll go through the details of that and we'll have a look at how that compares to some of the other countries that have got huge facilities, such as Argentina. We'll also have a look at what's going on in the economy in Ukraine. So we'll take a look at where they are with regards to GDP, what's been happening over the last couple of years, what's going on with inflation and interest rates, and what's happening with the currency. And here's a quick quiz question. Do you know what the currency in Ukraine is called? Well, I'll come on to that later. If you don't know, I'll tell you the answer. And then finally today, I'll wrap up with my summary. So what I think is going on in Ukraine in terms of its economy. Obviously, I'm not going to talk about what's going on with regards to the warfare because that's a much more complicated topic. But we'll have a look at where the economy is sitting right now, whether or not it's in a state of recovery, and what's likely to happen over the course of the next 6 to 12 months. But before we get into all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. I haven't said it for a number of weeks, but if you're a long-term supporter, if you've signed up as a Patreon or a YouTube member or a Buy Me a Coffee member, I genuinely really appreciate that support. It means a lot to me, so thank you for that support. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you so much for the time and the effort that you've taken to do that. It really does mean a lot to me. Ukraine is located in Eastern Europe and is bordered to the east by Russia, to the north by Belarus, the Sea of Azov and the Black Sea to the south, Moldova and Romania to the southwest, and Hungary, Slovakia and Poland to the west. Throughout history, Ukraine has been ruled by other countries, including Russia, Poland, Lithuania and the USSR. However, it gained its independence in 1991 following the breakup of the Soviet Union. Historically, because of its close proximity, Russia was Ukraine's largest trading partner, and in 2013, 30% of all imports were sourced from Russia and 24% of all of Ukraine's exports were sold to Russia. However, the relationship with Russia broke down irretrievably in 2014 when Russia invaded and annexed the Crimea area. And in 2023, Ukraine's largest trading partner for imports was China, followed by Poland, Germany and Turkey, and its 4 largest export markets were Poland, Romania, China and Turkey. This chart plots Ukraine's population dating back to 1950, and as you can see, between 1950 and 1993, the population increased from 37 million to 52 million. However, over the last 31 years, that position has been reversed, and the current population of the country is around 38 million, so similar to what it was back in 1950. However, if you look at the profile, you can see that between 1993 and 2021, there was a gradual reduction to 43.5 million. However, immediately following the invasion by Russia, which commenced in February 2022, there was a sharp reduction in the population as a result of around 6 million people fleeing Ukraine as a direct result of the war. What you can also see is that in 2024, the population has increased as a result of the fact that some people have returned to Ukraine. And that situation is expected to continue. But over the long term, it's expected that the population decline will continue as a result of the fact that Ukraine has a low birth rate and a high death rate. This chart shows the birth rate for Ukraine dating back to 1950, and as you can see in that year, the birth rate was 26.4 per 1,000 people. However, there's been a sharp reduction over the last 75 years, and the current birth rate is 8.5 per 1,000. And I think one of the interesting things about this chart is that there was a sharp reduction in the birth rate following independence in 1991, which is actually similar to what happened in Russia. There was a recovery between 2003 and 2013. However, following the invasion and annexation of Crimea, the birth rate started to fall again, and it's continued falling over the past 10 years. This chart shows the death rate in Ukraine over the same period, and in 1950, the death rate was just under 13 per 1,000 people. It actually reduced to a low point of 8 in 1964. However, over the last 60 years, there's been a sharp increase, and the current death rate is 15.2 per 1,000 people. And when you consider that the birth rate is 8.5, that shows you why Ukraine has a declining population, aside from what's happening with regards to people trying to flee the war. And this chart is the population pyramid for Ukraine, and if you follow the channel, you'll know that we've looked at population pyramids many times before. And what we have here is a breakdown of the population into 5-year age groups. So 0 to 4 at the bottom, 5 to 9 above that, 10 to 14 above that, and so on, all the way up to 100 plus. And the bars on the right-hand side in red show the number of females in all of those age groups, and the bars on the left in blue show the number of males. And there are a few points to note about this chart. Firstly, the red section is larger than the blue section. There are more females in Ukraine than males, and that's partly as a result of the war that's been happening with Russia over the course of the last few years. And the other significant thing to note is that the pyramid narrows significantly towards the bottom. In the age groups from 35 and below, we've got a reducing number of people, and that's partly down to that falling birth rate that we've just looked at, which reduces the number of people who are being born each year. Also, the fact that a lot of young people decided to leave Ukraine as soon as Russia invaded. And then the final factor is that a lot of those younger people have also been drafted in to fight against Russia, and many of them have lost their lives. And this represents a significant problem from Ukraine's point of view, because if they're going to rebuild their economy, obviously you need lots of people in the workforce to try to grow GDP and grow all of the different aspects of the economy. But clearly that will be very difficult if you don't have sufficient people. As I mentioned at the start of today's video, Ukraine has around $20 billion worth of international bonds. These are loans that were issued by the government in Ukraine historically to help fund the country. And in 2014, following Russia's invasion and annexation of Crimea, there was a financial crisis in Ukraine, partly caused as a result of the fact that the president at that point was pro-Russian. He wanted to strengthen the ties with Russia rather than the European Union. And the people in Ukraine were not happy about this. This chart shows the year-on-year movement in GDP for Ukraine dating back to 2012. And I really want to focus in on what happened in 2014 and 2015. We'll come on to talk about what's happening now later in the video. So what this chart shows is that in 2012 and 2013, Ukraine achieved positive growth in GDP. However, following the annexation of Crimea and the Ukrainian Revolution in 2014, GDP fell by 6.6%, and it fell by a further 10% in 2015. So when you take into account that we've got a year-on-year fall here, this was disastrous from Ukraine's perspective. Now, one of the implications of that fall in GDP was that Ukraine couldn't afford to keep servicing its international debt, and so it had to sit down with all of the bondholders and agree a restructuring. And that restructuring came at a very heavy price from Ukraine's point of view. It agreed a 20% reduction in the notional amount of the bonds that were in issuance with all of the bondholders. But in exchange for that, those bondholders were issued with warrants that gave them potentially unlimited upside in terms of once Ukraine returned to growth, they were entitled to a percentage of the GDP itself. In order for the bondholders to be entitled to a payout, GDP for Ukraine needed to be above $125 billion. And in the 5 years between 2021 and 2025, those bondholders were entitled to 1% of the nominal GDP. However, in the period between 2026 and 2028, the bondholders were due to be paid 15% of GDP above the 125 billion threshold, as long as GDP growth was at least 3%. However, if the GDP growth rose to 4% or above, then the bondholders would be entitled to 40% of the GDP. So I guess the question here is, what are the chances of Ukraine achieving GDP above that critical $125 billion level? Well, this chart shows the actual GDP for Ukraine dating back to 2012, and in that year, GDP was $182 billion, so significantly above that $125 billion level. In 2013, the year before the crisis kicked in, it was $190 billion. In 2014, it fell to 133, which interestingly is still above the $125 billion level. In 2015, it was down to $91 billion. It rose to $93 billion in 2016, $112 billion in 2017, and in 2018, the GDP for Ukraine was $130 billion, so above that 125 level. And as you can see, in each of the following 5 years, it's been significantly above 125 billion. So obviously, that's great news if you're one of the bondholders, but not great news if you're the government of Ukraine. Now, following Russia's invasion of Ukraine in February 2022, the bondholders agreed to a 2-year moratorium. So basically, that's an agreement in the financial world whereby you say, okay, you don't have to make any payments in the next 2 years. And this chart shows the impact of Russia's invasion on the price of those bonds. You can see in January 2022, the month before the invasion started, the bonds were trading at or above 90 cents on the dollar. So basically where bonds trade normally. However, immediately following the invasion, the price of all of those bonds fell to around 5 cents on the dollar. And what that tells us is that at that point in time, there was so much uncertainty that the bondholders were not expecting to be repaid. They were only expecting a 5% recovery. And as you can see from this chart, in the following 2 years, the price of those bonds remained very low. There is still a lot of uncertainty about whether or not Ukraine will be able to repay them. Now, as I think you're probably aware, the world of finance is not very charitable. They're happy to agree a 2-year moratorium to let Ukraine try to get back onto its feet, but those bondholders, which include some of the biggest fund managers in the world, including people like BlackRock, want their money back. And so the moratorium ended in August 2024. And over the past few months, there have been some feverish negotiations trying to put a new deal in place. And the reason why the fund managers want a new deal is because Ukraine's economy is starting to bounce back. This chart shows the quarterly movement in annual GDP growth in Ukraine, dating back to the second quarter of 2019. And what this shows is that in line with the rest of the world, in 2020 there was a fall in GDP as a result of the COVID-19 pandemic. However, Ukraine bounced back exactly the same as every other country and achieved growth in the second, third and fourth quarters of 2021. However, unlike the rest of the world, because of the invasion by Russia, which started in the first quarter of 2022, Ukraine saw a huge fall in its GDP throughout 2022, with the worst quarter being the second quarter when GDP fell by 37%. The fall in GDP remained above 30% in the third quarter and the fourth quarter of 2022. The reduction shrank to around 10% in the first quarter of 2023, and in the second quarter, Ukraine actually achieved growth of 19.2%, which looks very strong. However, you need to take into account that that quarter is measured against the previous 12 months, which obviously had falling GDP in all of them. So it's all relative. When you're looking at the actual numbers, there would still be a reduction in total GDP, but it's bouncing back. And as you can see, in the following 3 quarters, there has also been positive growth in GDP. So what these figures show is that there are some green shoots of recovery that are starting to be seen across Ukraine. It's starting to get its economy back on track. Obviously, the war is still ongoing in the 18% of Ukraine that's currently occupied by Russia, and those areas are not contributing to total GDP for Ukraine. However, in the rest of the country, they are starting to see a return to some semblance of normality. And the bondholders have now agreed a full restructuring program with Ukraine, whereby 37% of the notional amount of those bonds has been written off, and the repayments in terms of the coupons have been structured on a rising basis. So Ukraine has to pay an initial coupon of 1.75%, and that coupon rises to 7.75% dependent on what happens with GDP growth in Ukraine. So this is a much better deal than the one that was agreed back in 2015 following the annexation of Crimea. So let's have a look at some of the other fundamentals in terms of the Ukraine economy. This chart shows the official rate of inflation in Ukraine over the past 5 years, and the scale on the right hand side of this chart goes from 0 at the bottom to 30% at the top. So if we look at the period just before Russia invaded in January 2022, inflation at that point was running at 10%, which was actually a reduction from where it had been at the latter part of 2021. However, as you can see, immediately following the invasion, inflation took off and rose to a peak of 26.6% in October 2022. It remained at a high level until January 2023 when it was at 26%, and over the following 12 months there was a significant reduction in inflation, and it was down to 4.7% by January and actually hit a low of 3.2% in March 24. Now, over the past 4 months, inflation has started to rise again, but the current rate of 5.4% for July is significantly below the 9.1% recorded for Russia. However, one thing that you need to take into account is that inflation is cumulative. It's measuring the position against this time last year. And obviously, when you've got a huge amount of inflation that occurred during 2022 and the first part of 2023, we're talking about an increase against those price increases. So overall, things are a lot more expensive today in Ukraine than they were this time 3 years ago. Now, this chart shows the movement in food inflation over the last 5 years, and I always like to look at food inflation because it gives us an indication as to what's going on for the people in that country, whether or not they can afford to buy as much food. And what we can see here is a very similar pattern to what we just looked at for actual inflation. In January 2022, food inflation was running at 14%. There was then a significant increase, and it spiked at 35.6% in October, remained at that sort of level until January, so above 33%. And then in the period between January 23 and January 24, there was a significant reduction in food inflation. And if we change the scale of this chart to show what's been happening over the last 12 months, you can see that in the last 3 months, April, May and June, there's actually been a reduction in food prices. So the price on the shelves is actually lower today than it was this time last year. Now, that isn't quite as good news as it seems, because you've obviously got the huge impact of the massive increase in 2022 and 2023. So when you look at a 3-year perspective, obviously food prices are significantly higher today than they were 3 years ago. But the good thing is that the rate of increase in prices is starting to reduce. This chart shows the movement in the official interest rate in Ukraine over the past 3 years. What we can see here is that in January 2022, just before the invasion started, interest rates were at 10%, which equated to the 10% inflation at that time. However, in June 22, the decision was taken to increase interest rates to an emergency level of 25%. And this was done to try to combat those high levels of inflation that started to kick in across the economy following the invasion by Russia. Now, as we've just looked at, during the course of 2023, inflation started to reduce significantly. And in direct response to that, interest rates were also brought down, and the current interest rate in Ukraine is sitting at 13%, which is 3% higher than it was before the invasion started, but is obviously significantly less than 25%, and is also 5% lower than the 18% currently in Russia. This chart shows the exchange rate between the US dollar and the Ukrainian hryvnia. So if you're still thinking about that question that I asked at the start of today's video, the currency in Ukraine is the hryvnia. And what this chart shows is that at the end of January 2022, just before Russia's invasion, $1 was trading for 28 Ukrainian hryvnia. Today, it's trading for 41. So over the past 2.5 years, there has been a significant reduction in the value of the hryvnia. And if you look at the shape of this chart, you can see that in July 2022, there was actually a devaluation of the currency. We can see that straight vertical line. That tells us that at that point, the government decided that it needed to reduce the official exchange rate. The Ukrainian hryvnia is a managed exchange rate. Ukrainian government are setting the level. You can see that it's continually coming down, and this represents the fact that the Ukrainian economy has been in severe difficulty over the course of the last 2.5 years, not surprisingly. Now, alongside the international bonds that Ukraine has issued, the IMF has also provided loans directly to Ukraine. And Ukraine is now the third largest holder of IMF debt. This chart shows the countries with the largest outstanding loans to the IMF. And as you can see, Argentina is the country with the most debt sitting with the IMF. It has an agreed facility of over $42 billion. The second largest exposure is Egypt, which has exposure of just under $15 billion. And Ukraine comes in at number 3, despite the fact that it's got an agreed facility of $15.6 billion. It's only drawn down $7.6 billion of that. So it has another $8 billion that it can draw upon, providing it can meet all of the terms and conditions that the IMF has set. Pakistan is the country with the fourth largest exposure to the IMF, with around $7.8 billion, and Ecuador comes closely behind them with $7.7 billion. So what's the summary and conclusion today? Well, I wanted to post this video because I think it's been long overdue. I haven't talked about the Ukrainian economy at all over the past 2.5 years. And obviously, Ukraine has suffered significantly as a result of, firstly, the annexation of Crimea, which started a revolution in Ukraine and caused them to go into a financial crisis for 2 years, actually caused them to the point where they almost defaulted on their debt. They had to restructure that deal. And the deal that they came out with was hugely penal. As we discussed earlier in this video, they are actually due to give a percentage of their GDP to those bondholders as part of the warrants. That really wasn't a great outcome when you think that they lost a large portion of their land to Russia as part of the annexation. And the penalty in terms of the bondholders was that they wanted to take an arm and a leg off them when they got back on their feet. So Ukraine has had to struggle with those bonds over the past 10 years or so. And in 2022, following the invasion by Russia, they had to put all of those bonds on ice. So the bondholders basically agreed to a 2-year moratorium. They said, okay, you don't need to pay us anything back. And basically, the reason that the bondholders did that, because Ukraine had no chance of actually making any of those payments. They were obviously looking to defend themselves, using as much capital as they could to support the war effort. So the last thing that Ukraine was really interested in was trying to pay bond coupons to BlackRock and all of those sort of guys. Now, unfortunately, that moratorium only lasted for 2 years and has recently expired. And as a result, there's had to be another restructuring, and a new deal has now been put into place whereby Ukraine has agreed to pay 1.75% coupon on those bonds, rising to 7.75%. So again, very expensive, but nowhere near as expensive as the original deal that was agreed back in 2015. And the reason why Ukraine is able to do this, as we've seen in today's video, is that the economy is starting to recover. GDP is growing again, it's going up. Some of the industries in Ukraine are starting to get back onto their feet. Everything is now getting back onto a safer footing. But obviously, the key problem that Ukraine has here is that the war hasn't ended. The occupied areas are still occupied by Russia. Russia is still fighting on the front. It's causing lots of problems. There's still a lot of uncertainty, and there are still a lot of Ukrainians who don't feel safe enough to go back to their homeland and set up their lives again. And until that happens, until we get some sort of peaceful settlement in Ukraine, the economy is always going to be very precarious. Things could change at a moment's notice. There could be another strike on Kyiv or something happening which could throw the country into a complete state of disarray. But I wanted to post this video really to talk about Ukraine, talk about its economy, because I think we just think of Ukraine as being a war country now. If you watch mainstream media, all you see is footage of tanks and all sorts of buildings that have been blown up, and it looks really quite a depressing place. But obviously Ukraine is a big country. Around 40 million people live there still today. And those people are trying to go about their everyday lives to carry on as normal, and the economy needs to keep going. So I wanted to post this video really to talk about what was going on with GDP and inflation and interest rates and the exchange rate, all of those sort of things. And clearly over the last 2.5 years, it's been a very difficult period from Ukraine's point of view. And unfortunately, it's likely that that will continue for the foreseeable future because there doesn't look like there's any end in sight. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.
Okay.